No, good afternoon, everybody. Let's start off by saying that anyone can start investing in shares, but not everyone is equipped to invest themselves. So, saying that, I want to say this at the outset that if you do not have the time and the interest to learn about share investing, then it is highly recommended that you seek advice from a professional financial advisor, especially when it comes to retirement planning. So that's I want to put that out at the outset. But saying that also is, while going it alone is not for everyone. If you're someone who prefers to be in control of your decisions, especially when it comes to your share investments, you might be well suited to become a independent share investor. And that's our topic today: how to be a independent share investor. So share trading involves inherent risks and unpredictable fluctuations. So how you handle those losses and the lessons that you learn from those experiences also are very, very important. So taking the time to learn about share investing will help you to possibly bend the odds in your favor, and obviously hopefully make more money. So those of you that don't know me, my name is Shaun van Berg. I'm an investment specialist here at PSG Wealth. And today we're going to be discussing that even as an independent share investor, with the right people by your side to help guide you on your journey, your investment journey will be far more manageable. And that's the whole crux of this presentation today. Okay, so looks like everybody's coming in. Those of you who are late, this presentation will be recorded, and I'll be sending it out hopefully either tomorrow morning or tomorrow afternoon. Okay, so I hope you guys are with me. Let me see if everybody can see my screen. Just type yes. I will say yes, you can see my screen also. Is that okay? Cool. Okay, awesome. Okay, I'm going to move on to the next slide. So this is our agenda for today. I'm going to discuss more about being a passive investor, and then some of the criteria that you need to be an independent investor. I say it's more the mindset. So it's being decisive, how to be creative and taking the initiative. And then the main thing also is for you to have a long-term disciplined approach to investing. And then we're going to talk about some of the tools available to you as you learn to become a good learner and a good researcher. And then we'll wrap it up. Okay. So, so just to get as an intro quickly, there's a common misconception related to share investing that it mainly involves obviously the ongoing research, selection, and management of individual shares. But I can say, also you can simplify the whole process, the investing process, and build a diversified investment portfolio. I'm talking about a diversified share portfolio by investing into what we call exchange traded products. So these are, I use the term exchange traded products. It's an umbrella term, covers number one, exchange traded funds, and then exchange traded notes. In past webinars, I have discussed this investment product. But bottom line, it's you're investing into a basket of shares that are packaged together and as a investment product. So they're classified as passive funds. So they are managed by a portfolio manager, and the advantage here is that obviously the expert selects the shares for you on your behalf. So you as a complete novice that's first starting out, there's nothing about shares, this will give you time to learn more about the share selection and investment process while your funds are growing. Okay, so I just wanted to put that out there as a starting point, especially for some of you that are complete novices and are lost where to start. Maybe start looking at ETFs. Remember, they trade like shares. So here's some of the benefits. What are the benefits of getting involved with ETFs or ETPs rather? First of all, diversification. There's a whole wide range of them. Here in South Africa is about 94 available. They track domestic and offshore indices, equity indices. There are commodity-based indices. There's property. There's what they call the fundamental and the style ETPs, as well as also those of you that want to be more involved, more exposed to the bond market or into the multi-asset portfolios. ETPs will give you that opportunity. That's number one. Number two, obviously asset classes follows on very closely what I just said now. in the past, you weren't, you didn't have access to, for example, the bond market or the offshore market. Now you do. Okay. So gives the, and we'll talk about it just now. You see there that the do-it-yourself investor gives the do-it-yourself investor to express an investment view. Okay, and I'll be talking just now about it again, but touching on it, for example, the budget speech in an hour's time, having a view on the market. How can I take advantage of what happens in the market and have a view on that in a portfolio? And then linked to that also very closely is obviously liquidity. You can buy and sell ETPs anytime on the share market, like a normal share. And linked to it also very closely is accessibility. You can log in with your username and your password to your share trading account on the PSG Wealth platform. And obviously, you can buy and sell shares like that yourself, or you can also find our trading desk and give them the trade, and they trade on your behalf. Okay, flexibility. Obviously, as I say, you got a whole wide range of funds to choose from. For example, obviously, you've heard of Satrix, which is the one that's been around the longest, Satrix 40. You've got things like the core shares, the Absa Bank, the New Gold. There are a lot of them. Okay, they're very cost effective. So basically, you buy, as I say, you're buying a basket of shares. You buy the ETP once. Having exposure to a basket of stocks. If you had bought the index yourself, in other words, if you bought the top 40, if you had to buy each individual stocks as 40 shares, it would have been a lot of money. Number one, from a brokerage point of view, and number two, obviously securities transfer tax. So very cost effective in that point of view. Transparency. Because they're listed on the Johannesburg Stock Exchange, the prices are updated all the time. So what you see there is what's happening in the market. Okay, so it's not like a unit trust where at the end of the day the prices are set. This is as it's happening. You'll be able to see what's happening with the ETP. Price determination, as I said now, very closely linked to the previous point, is that at the end of the day, the unit trust, the prices are determined with ETPs as is happening. Supply and demand pushes the price up and down, and that's obviously what's happening with the ETP. And the main thing here, and that's why I brought this into this presentation, is ideally suited for the do-it-yourself investor. The independent investor, consider maybe ETPs in your portfolio, especially those of you that are completely a novice on start out. This is something you can consider. So one of the strategies a lot of people use is what they call a core and satellite investment approach. So I call this the blended approach. This is how you blend a portfolio. So how do you go about it? Basically, a core and satellite investment approach. It's just a method of portfolio construction which is designed to minimize the cost and volatility on the one hand, but also on the other hand is for you to or gives you the opportunity to outperform the broad stock market as a whole. So, for example, the top 40, that's what we call the index of the market. So that would be your core. So as a suggestion, again, this is just for illustration purposes. This is not to be construed as advice. This is my disclaimer. So you might have 50% of your funds involved in an index tracking fund, like the Satrix 40. So instead of trying to beat the index, you buy the index. That's a philosophy here. So in this suggestion, maybe put 50% in that scenario. And then the idea is that you're going to have satellites around it, and that's be more actively managed investment. So the idea here is you're going to have access to what I call the best of both worlds. And on one hand, you've got better than average performance, depending on obviously your investment objectives, but of limited volatility, again, comes to your risk profile, but also you're controlling the costs. So as I say, best of both worlds. So that all comes together in what I call a flexible package, and that's again the ETPs. So, for example, the 5 satellites, the other 50%, you might say, okay, let me put 10% into new gold. With the volatility now, well, not so much the volatility, more of the uncertainty, or it's created by the volatility, the uncertainty in the market because of the coronavirus, or whatever the case might be. Gold shares, people are moving into gold as a hedge. I want to have exposure to that. Okay, so maybe I'm allocating 10% to new gold. Again, as I say, for illustration purposes only, not to be construed as advice. You might want to have maybe 10% into you want to have exposure to the commodity market. You don't want to be left out in the rain. You might want to have exposure to offshore. So you might say, okay, let me have exposure to the Signia Itrix MSCI USA index, because obviously the US markets are flying, or the Nasdaq. That's also through the SATX Nasdaq 100 feeder, for example. You might want to have exposure to 10%. This is my first scenario here, or fourth scenario. You know, I might have a top 40 year, but what happens if the mid caps? I want to have exposure to the mid caps. So 10% I might put into the Ashburton mid cap ETFs. And then lastly, my last 10%, I might decide, okay, I'm looking for more dividends. So I might want to have exposure to, or when I say dividends is income, I might have exposure to the core shares dividend aristocrats ETF, or I might even say, okay, let's look at property tax, the core shares prop tax thing. But again, as I said, this is how you construct a portfolio. Okay, so again, the point I'm trying to make here is for the novice investor as a starting point. Okay, so let me just have a quick swig of water. Let's move on. So what about the characteristics you need to be an independent share investor? What are the things you have to look at? And again, as I call it, the mindset, or you can also look at it as your philosophy, your overall investment philosophy. And the idea here, you know, I find that people are successful, are decisive, they are creative, and they do take initiative. This is a starting point. But also, just very simplified, what do you need? I also believe that to start out, you need a modest amount of capital, time, and effort. When I say modest amount of capital, yeah, you can start off with 100,000 rand. The idea of 100,000 rand is for asset allocation. So how much of your portfolio are you going to allocate to the top 40, mid caps or small caps? So it's the structure of your portfolio. The more funds you've got, that's the point I'm trying to make. The more funds you've got, the more flexibility you've got. So in this, again, is an example. It's for illustration purposes only. You might say, okay, I'm going to buy 10 shares, roughly about 10,000 rand each. Remember, from a direct client's point of view, your cost is 1%. So the bigger the trade, the cheaper it becomes. Okay. Yeah. At PSG Wealth, direct clients, we don't have a minimum investment, but you must take into consideration the trading costs. So, you know, our minimum trading cost is 98 Rand per trade. So if you're going to come with 1,000 Rand, you must understand that your shares move up 9.8% to break even on costs. Again, that's why I said, yes, look at maybe 10,000 Rand per trade. And again, as I say, nicely, a nice starting point would be about 100,000 Rand. So hopefully that answers the question about the capital. When it comes to a time, a modest amount of time, when you first start out, I suggest at least between 30 minutes and an hour a day. Why do I say that? The idea is to get into your investment habit. Remember, on Saturday and Sundays are also days. So the idea is to set aside a time where you're going to be learning about the market on the one hand. So I always say, if you're looking at 30 minutes a day, 15 minutes at least learning about the market, and the other 15 minutes, I call it the practical side, where you're creating the watch list or doing the research and things like that. But this is where you learn to be a good learner and a good researcher, and the idea is to get into investment habit. So on a daily basis, set aside that time. And then also when it comes to a modest amount of effort, and this is something I've always come across all my time here at PSG, you know, how do you view the market? Now, are you just curious about the market? Are you kicking the tires, or are you serious? Okay, how serious do you want to take this investment? Do you treat this as a hobby, or do you treat this as a business? So when it comes to effort, a dictionary term would say it's a vigorous and determined effort. And this is what you need to, a vigorous and determined attempt. Okay, so how do you view the market? So are you going to dilly-dally, just speculate, or are you going to take it a bit more seriously? So it comes back down to, as I say, your relationship with money, and obviously your money blueprint and things like that. Okay, so as a quick introduction, let's talk about the psychology. More often than not, people who find success are those who are bold enough to take the initiative and be creative with their investment ideas. Okay, we'll talk about it again in a bit more detail in the next few slides. Basically, an independent share investor does not follow the crowd. They go against the crowd. We call it a contrarian. When everybody else is selling, you want to be buying. When everybody else is buying, you want to be selling. But you have to be very strong in your view on the markets. So yes, the independent investor will have an optimistic outlook about the findings and the decisions, and they will follow their instincts. And basically, I always find that the people in this scenario have very strong beliefs about their investments. Okay, there's reasons why they bought into this company, because they have a view of the long-term prospects of their company. And I find that basically an independent share investor puts his money where his mouth is. Okay, so you have to be a critical thinker who takes the time and analyze the options available. What are the options available in the market? So you take the time to weigh that up. But your discernment, when you, as you obviously learn more about the market, will increase your chances of making better decisions, and it will pay off. And that's the whole idea about it. So it's a bit of trial and error as we go along in the market, especially when you're first starting out. But as you evaluate your, as I say, your options, and you experience positive outcomes from your decisions, you'll develop confidence. And that's a crucial thing about being a independent share investor. It's that confidence factor. Yeah. So let's say, for example, I've had a lot of calls the last few days regarding today's budget. A lot of people don't know what's going to happen, what's happening with the corona, for example. So the whole idea here is to stop playing what I call what if scenarios. What if? Okay. What if the coronavirus has a bigger impact, and is having obviously an impact on the markets already? We're seeing that now with the impact on global economic growth. We see that impact on investor sentiment. Obviously, there will be impact on the flow of goods, services, and we've seen also travel restrictions. So obviously, the flow of people around the world. So yes, there will be a global trade impact, but also we're seeing already what's happening with the impact on commodities. Oil prices falling. We saw now today that the Sasol share price is falling. That's on the back of a weaker oil price. There will be supply chain shortages across many industries globally. You need to anticipate those and create what if scenarios. That's what I'm talking about here, and that's being creative in your investment ideas. What about today's budget speech? You know, Finance Minister Tito Mboweni, he needs the money, but the state coffers are bare. We all know this. The question is where he's going to find the funds, and how much pain will that cause taxpayers? Okay, the big elephant in the room obviously is the public sector wage bill. We need the funding restrictions at state-owned enterprises, all those kind of things. But also, a lot of people are talking about what happens if Moody's downgrades us. Yeah, will there be rand weakness? Is your portfolio skewed towards rand hedge stocks and that kind of stuff? Will there be a value trap, or will there be opportunities in the market? And these are the kind of things that I say by having that what if scenario and having a strong view on your investment. Okay. So guys, any questions you have, please type in the question box, and then I'll get to it a bit later. Okay. So you should have a long-term disciplined approach to investing. Okay, why do I say that? Because you need an appropriate amount of time and energy to do your research. Okay, as again, at least between 30 minutes and an hour a day. The goal is to get the investment habit. I mentioned that just now. So the idea is, yes, you're going to read about investment books, you're going to read news articles, you can look at research done by the investment companies. But the idea now is to always stay in the know. Everything on the pulse, as I would say. The process helps you to create an initial watch list, and we're going to that process just now, of instant looking shares, and the idea is for you to do further analysis. Okay, it's this funnel approach, narrow down the choice. So you also develop the skills in your financial analysis and valuation. And the independent investor takes control of the share selection process, number one, and number two, obviously the investment process. Okay, you study the shares in the market, and you gather information about the share, and then obviously some of you might go so far, and this is what I've done. I'm a fundamental analyst and a technical analyst. So some of you might also use the technical charts. But bottom line, you want to build a balanced share portfolio, a very well balanced share portfolio, and you can do this all on the online trading platform. Okay, so saying that, investment discipline is not easy. And that's also a very important thing. Remember, I spoke just now about confidence, also having the discipline. So despite the best intentions and claims to the contrary, many investors chase performance. What are the hot stocks right now? Okay, I have that all the time. Okay, they act emotionally to what happens in the market, and obviously we have as what I call a knee-jerk reaction to a lot of things. So if you're in and out the market all the time because you're reacting to what's happening, you obviously will incur higher trading costs, and obviously, if you don't have that long-term investment approach, I just find that your plan will be useless because you're very fickle when it comes to your plan. So it's very important that have a disciplined approach, stick to your plan, as I would say, right? In trading, where you say trade the plan or plan the trade and trade the plan. Same thing you're investing. Okay, plan the investment and invest the plan. Okay, I hope that makes sense to you guys. So we see that all the time now, especially with the market where it is now with the volatility. People get nervous, obviously people get anxious, and they drop and change their portfolio. Okay, do not do that. Okay, so there's 5 things I want to discuss quickly when we talk about this. An idea is to create what I call an investment philosophy. This is my opinion, and I believe that there's 2 philosophies in the world when it comes to investing. You can either believe that you have a high probability of beating the markets, or you don't. Those are my 2 philosophies when it comes to investment philosophy. Okay. You can, and again, this is my opinion, markets are more efficient at pricing shares than I could ever hope to do. So, I look at it this way. My goal is to become consistently profitable. That's my main goal. But also I believe that I do not have enough skill to consistently add value to my share portfolio by picking mispriced or undervalued stocks, shares, or indices. To do that consistently. So that's why I want to bend the odds in my favor by using other things. Okay. So my goal, as I say, is market returns. That's all I need over the long term. And once in a while, I might get lucky and buy the share that, as I say, outperforms the average. Okay. So that's number 1. Have a long-term investment philosophy. Number 2, and that fits into very, very close to the first one, is asset allocation that obviously is based on that philosophy. And when I say asset allocation, basically I'm attempting to balance risk and reward by adjusting the percentage of each share in the investment portfolio according to obviously your risk tolerance, your investment goals, and thirdly, obviously your time frame. Your time frame here is long term. Gone are the days we say long term or 20 years plus. Long term now is 5 years plus. So I have 5-year chunks goals. And the main goal here, your objective here, is the characteristics of your whole portfolio will be displayed with this philosophy. So bottom line, it's just a prudent asset allocation. Okay. This will give you I call it a personalized beacon, something to aim for through the turbulent times in the market. Okay, so the fixed percentage that you plan to stick, the idea is to allocate a fixed percentage. Again, comes at 10 shares, 10% to each share as example. But the idea is to stick to that over time rather than floating or tactical reactions to the market. And then third point there is maintain this portfolio through all market conditions. So the challenge here is that stick to that plan. When it comes to, we talk about rebalancing. So sometimes the share might have a good run and it becomes more than 10% in your portfolio. So you need to rebalance that. You might do that on an annual basis. What happens if you get dividends? Now that extra cash, what are you going to do with it? Okay, what happens if you withdraw those dividends? How do you adjust your portfolio? So it's maintaining that that ratio or that asset allocation all the time. The fourth point there, do not change the asset allocation due to recent market activity. So, it's long-term needs. You need to maintain that for long-term. Now, if you're worried about what's happening in the market, I always say, if you're not willing to hold a share for at least 10 years, then you shouldn't be owning it right now. It doesn't matter what's going on in the markets today. Remember, in this context, I'm talking about buy and hold long-term portfolio as an investor. I'm not talking about trading in a scenario. Okay? Long-term investment portfolio. So you should be in for the long term. Do not hold back on new investments. So if your view is to add on a monthly basis, you've got additional income coming in, you want to invest into your portfolio and you want to grow this, don't stop that initial that monthly investment coming in. Still allocate the funds on a monthly basis. Okay, investing new money all the time is very important. So be disciplined in your investment approach, and that's all part of forming that good habit, but doing it consistently. Okay, so I hope this guy gives you some input here. So be a good learner. So remember, our goal is to build a well-balanced portfolio that works if you actually do it in good times and bad times. So now there's an old saying in the market, is a cliche, what you lose on the swings, you make up on the roundabouts. That's why you build a well-diversified, well-balanced share portfolio. So let's get on to this point here. I'm sure we're running out of time. I'll talk a bit faster. Be a good learner and researcher. What I mean by this, there's a lot of information available out there. There's a lot of online education, there's abundant, but share investing is not simple. So the idea is to, remember, you want to focus on the task at hand, learn about the market and things like that, learn about the fundamentals, a fundamental approach to the market, learn about the technical approach. That's what I'm talking about here. So as a good learner, I suggest those of you that are complete novices, if I highlight this here, you'll see there's a link. On our website, there's online tutorials. So it's all the theoretical information about the market. We take it right from the basic share market concepts. So it's designed into what I call a beginner, intermediate, and advanced. So it gives you all the theory. If you go so far, there's webinar archive of past videos, like we're doing today. There's an archive of that also. Another tool for you to learn about the market. And then, I got the email address here. And the idea here, and this is my philosophy. I have an old Chinese proverb as a philosophy when it comes to education. You guys are welcome to email me. I'm there to help you. But my philosophy is that old Chinese proverb: give a man a fish and you feed him for a day. Teach him how to fish and you feed him for life. So when you guys email me, I also find that people, if you write it out, and this is the first step, if you email me, it gives you opportunity to clarify your thoughts, and I find a lot of people actually answer themselves when they email me beforehand. Okay, but I'm glad you answer your emails, but I'm going to throw it back to you. So same with the phone calls. You phone me, I want to know what work you've done. It's the old porcupine approach. You throw a porcupine at me, I'm going to catch it and throw it right back to you. What do you know about the share? What homework have you done, etc.? So that's by being a good learner, and that's how I teach people about the market. On the other side of the coin, be a good researcher. So the first thing you need to know is, if you want to get involved in direct share investment, what is the product? What are the costs? What are the fees? What are the risks? Who's it ideally designed for? And then secondly, you need to ask yourself, as an investor, am I a value investor? Am I a growth investor? Or am I a dividend investor? Again, that comes back to the online tutorials, goes into more detail. So also, again, there's tools on our website under the research hub. And also we go so far as to give you a research from our analysts here, as what we call investment ideas. But this is what it looks like on our website, the starting point. Once you've logged in with your username and password, click on the button here called Research Hub. Okay, as a starting point, there's fundamental recommendations. So there's, for example, the big quants, large cap stocks. There's the small caps, investing for dividends. Those of you that are first starting out, as a starting point, I suggest maybe look at this. Okay, goes one step further. If you click on this company analysis over here, okay, it'll open up what we call the investment idea. This is our last one we did now, the 27th of January. That was on Bitcorp. This is actually 15 pages on the company. So yes, you can also go to the company's website and go look at the investor section, download the financial statements, combine that with our research, you'll be more informed. Bottom line, you're going to be making more informed investment decisions. Okay. Also on our website, under the research hub, there's things called investor filters. This is where I can scan the market based on fundamentals. If I click on a little button here, undervalued quality stocks, it spits out a list of shares for me. So you can see they're all based on a PEG ratio, is what we call undervalued. Okay, undervalued. So it's a starting point for you to create an initial watch list. So on our website also, and again, most of you as buy and hold investors, if you click on the investor tab, that investor platform will be sufficient for most of you. Those of you that want to take it one step higher, you might want to consider looking at subscribing to Viewpoint, because there's additional information there that I find very useful. For example, this market map This was a screenshot this morning. Obviously, the market was very red, but it highlights at a glance where the opportunities are. If the market's falling, I'm looking at buying and vice versa. So market data, and you can customize this look and feel in Viewpoint. I can go one step further and create a watch list. What I like about the watch list here is that I can rank it, so I can see which stocks have fallen the most, which stocks have gone up the most. This year, by the way, I'm looking at the watch list. This is the top 40 shares. So I can see on the top 40, the large cap stocks, which ones are moving. Where there's smoke, there's fire. I can go one step further and start looking at the charts. Okay. So I'm also I can subscribe to live prices if I want to. Here's a minute by minute chart. You can see what happened when the market opened this morning. Okay, that little gap there, gap down. This was on Anglo American. Okay, market gap down big time this morning, and that every minute little bar chart was drawn. Okay, so it's got all the classical traditional technical indicators. Those of you that want to use more of the charts, this Viewpoint will help you make more informed decisions. So guys, that's just how you become a independent share investor. The whole idea here is to narrow down the choice using a approach, either fundamentals or technicals, or combine them both together. And the idea is just to fine-tune your investment philosophy, fine-tune your investment portfolio for the long term. Okay, so people, just quickly in summary, in conclusion, you're not on your own. Even as an independent investor, with the right people by your side to help guide you, as I mentioned right in the beginning, your investment journey will be far more manageable. I'm there to help you. At PSG Wealth, we offer various research and investment tools to help you make well-informed investment decisions. Remember, being a do-it-yourself investor does not mean you have to be completely on your own. Okay, quickly, before I look at the questions here, here's a question here quickly from, okay, let me just quickly maximize this, the questions. Okay, Cornell else is having a problem with her sound. Are there any questions? Okay, here's a question from Jan. Says, I'm a complete novice. I want to learn about investing, but not have a lump sum investment. What can I do? Okay, Jan, as I said, ideal situation would be to save up at least 10,000 Rand. With 10,000 Rand, I'd suggest, again, please, this is not advice. 10,000 Rand, I'll go buy ETF. Exchange traded products through one share, have access to a basket of shares, and learn about the market in the meantime. But ideally, the more funds you've got, the better it is. With 100,000 Rand, 10 companies, that's a starting point. Okay. I suggest also, if you've got less than that, maybe consider opening up what do we call a voluntary investment plan, a unit trust account. On our platform, go register for a unit trust account. You can start as low as 500 Rand per month. And again, build up the capital. As and when you have more additional funds, pump it into that. And as down the line, you've learned more about the market. In the meantime, open the share trading account, and then move those funds across. That's a starting point. Okay. I hope that answers your question. Here's a question here from Colleen. Okay. How much is Viewpoint? Sorry, I forgot to mention that. Viewpoint, yeah, you have subscribed to it. It's 200 Rand per month, plus VAT. So it's, what's that, 230 Rand. Live prices, by the way, is 99 Rand per month. So to combine that together, again, remember, this is not for everyone. The investor trading platform is ideal for the buy and hold investor. Those of you want to take it one step higher, those are more serious. Yeah, it's highly recommended, by the way, for those of you that are trading. You want to be trading more actively in the market. Those of you trading the equities and trading the bigger sums, those who are trading CFDs and single stocks, I highly recommend the Viewpoint trading platform. Okay, drop me an email and then we can talk. Okay. Ethan, good question. Yeah, is there any big chance as a novice investor of losing everything or losing big? And how can I avoid this? Good question. Okay, so a share will never go from 10 Rand, well, no good example, but the SATIX 40, okay, it will never go from whatever the price is down to 1 Rand, just overnight. Okay, it'll never drop like that. It'll never lose 100% overnight. So it'll gradually come down, maybe 1 or 2%, sometimes 5%. But the idea is obviously you're not going to be just buying and holding a share and forgetting about it. You'll be watching your portfolio all the time. That's number one. Okay, remember right at the outset, Ethan, is that if you're learning about the market, you're going to bend the odds in your favor. And that's a confidence factor. You're going to learn about things about risk management. If you're an investor, again, on a stress, you want to build a well balanced portfolio. So it's diversified. Not going to have all your eggs in one basket. So a diversified portfolio. And that's why I use the example of 10 shares. You want to spread those 10 shares between 3 and 5 different sectors. So it's not if one share drops in your portfolio, the other shares will balance it out. That's how you manage risk. From a trading point of view, those of you that are trading, another thing that you have to use as a trader to minimize risk is a stop loss. Okay, those of you trading single stocks and CFDs, you use what they call position sizing. You're not going to allocate all your funds to one particular trade. Maybe 2%, so 2,000 rand per trade. So if I hope that answers your question, the share will never go from 100 rand to 1 rand overnight. Okay. Yes, we've had scenarios with the Steinhoffs of the world and things like that, but still not go to 1 rand. It did not go bang in one night. Okay. So you still have time to jump out and things like that. Okay. I hope that answers your question. Okay, cool. So quickly in summary, okay, look, that's all the questions. Now the questions going through. Oops, there's another one. No, just the sound. Yeah, I'll be sending the presentation and the recording to you guys. Okay, quickly. In summary, are you an investor? Are you an independent investor, or do you need a financial advisor? That's a very important question that you need to ask yourself. Depends how much money you've got, especially also depends on your investment objectives. If this is retirement funding, please speak to a financial advisor. And there's a lot available on our website. If you don't have a financial advisor, drop me an email and we can help you in that process. Second question you need to ask yourself: okay, if I decided on direct share investment, or am I going unit trust? If I am a direct investor. Okay. You can also look at ETPs or a bull share portfolio. These are some of the questions you need to ask yourself. Investment style: am I a value investor? Am I a growth investor, or investing for dividends? Obviously, you need to understand those investment styles. And that comes back to my last point there. Learn about the market and do your research linked to that. Okay. So guys, quickly, before I end off, if you haven't got an equity share trading account with us yet, and you're a visitor on our website today, I hope this website, this presentation has benefited you. But please go click on our website, go click on register, and open up a share trading account with us today. As I said, the presentation will be sent out to you, the recording hopefully by tomorrow. And lastly, from my side, happy investing, and good luck. Bye for now. All the best.